So, hey, welcome back. I'm really happy to have once again my good friend David Yu back on the podcast. David is recently repatriated back from Shanghai. He's up in Washington D.C. area now. He is the chairman of Asia Aviation Valuation Advisory, or AVA for short. His background is fantastic. He is a senior ISTAT aircraft appraiser, one of only 20 in the world. He is the author of Aircraft as an Asset Class, a 400-page book designed all around aircraft leasing industry. And he is a professor up at teaches finance at NYU. You've done a hell of a lot of things, David, in your tenure, and you're younger than me. That's what scares the hell out of me.
Yeah, no, well, thanks for having me again on the program, and love to. It's great to always chat about what's going on in the world, and yeah, no, I've done quite a lot of interesting things over the years, and I think starting my own our own private equity firm is in aviation, investing for institutional and among other roles gives you greater perspective as you tackle this topic in general.
Yeah, no, it's a lot of fun, and you've raised a lot of money, over in Asia, and you've sold a lot of airplanes too. You've done a lot of transactions, so let's just talk about what's happening in the world and go from there.
Sounds good.
Obviously, probably the 800-pound elephant in the room is Boeing's issue right now. Max, once again is short-term blip, short-term hiccup, long-term cancer. How do you describe it?
Well, Boeing definitely has its production issues, right? Quality control issues at this point, and it's pretty front and center again. I would have hoped that the management would have fixed this by now, and now all many of its customers, large customers, have started to talk about this, right? And the importance of getting this product out. And good in the safety perspective, right? Because ultimately, there's not many large aircraft OEMs at this point. It's Airbus and Boeing, and who are you going to get? The Comac C919, but that's a long ways off in its production production capacity. So we need the aircraft. The airlines need the aircraft. They want a good aircraft so that they can grow and expand from there. So all of us are rooting for it. It's just a question of how can they get their act together and make sure.
What does Boeing have to do to put confidence back in the market? I mean, look, it's they're an assembler. I mean, the subcomponents are all manufactured by a whole litany of suppliers, and they bring the thing to Renton, and they assemble it, the same, much the same that Airbus does in Toulouse and Mobile. What do they need to do? What do they need to do to put confidence back in the airplane?
Well, first off, they need to go and do an audit, a full audit, and fix what is going on first off in their entire process, because whatever they were doing before, it hasn't fixed these issues, and it's popping up in very, very bad ways, manifesting in these scary incidents. And number two is and I see talk about it, is letting more of the customers, the airlines, et cetera, come in and really help also look at the process. I think before Boeing has been very, very proud and wanted to write their own ship. But at this point, they need to build more confidence. And I think having these things are good things, right? It basically makes it so that if there's something missing, someone can talk about it and go from there. Of course, it's probably not what Boeing would want, but this is something that needs to be done at this point, is to rebuild that confidence. And it's not so positive at the moment.
Yeah, no, I look, I think if there's ever a company out there that's dying for an activist shareholder, it could be one. Boeing could be top of line. I don't know, but it's that's kind of my sense, is maybe an Ackman or a Pels, or somebody who's going to drive a little something other than the culture that's there is a big would be a great favor to the shareholders and the customers. So but ultimately, along the same lines as the MAX, China, China was holding off. Boeing sort of forced their hands. Either you take these things, the MAXs, or we sell them elsewhere. I get it. Is China really a long-term market for Boeing, or is this just we'll use these guys for as long as we can until we get the COMAC dialed in, and then we become a competitor? What's the Chinese landscape look like?
Well, there's really only Max 8s, not Max 9s, right, that are on order, first off. So I think that's but the regulators itself are very, very conservative. If you actually look at what they're doing in terms of the distance between takeoffs, landings, et cetera, it's all actually much more conservative in the U.S. air traffic control perspective. They also, for those who don't know, but basically they also control along with the NDRC, basically what airlines can, what aircraft they can use, what routes they can fly them on, and what types of aircraft they can get, number of aircraft. So it's very regulated from that perspective, right? So I would say this: do they need Boeing? Absolutely, right? If they don't have Boeing right now, Airbus is going to hold them to under the gun, right? And they're already showing that, right, because of this whole long lag of deliveries. But ultimately, they want the COMAC plane to be successful. That said, it's been delivered, but it's flying very, very low hours, and it needs a lot of time to get back up to speed to be more readily used as a tool for the airlines domestically for the start, right? The EASA FAA certification is nowhere near in sight. I think that will be. I think that'll be difficulties in getting that approved. So they will need Boeing aircraft.
So Boeing and Airbus are players for at least the next decade in China.
I would say more longer than that,
or
but
longer.
Yes.
What about the geopolitical? Yeah, obviously a lot of tension. Yeah, a lot of tension right now, U.S. and Beijing. Does that subside? You got a good eye on the pulse from that.
I would say this: after the meeting in San Francisco with the APEC meetings, I think things have cooled down a little bit. The rhetoric and everything has calmed down. You see much more interactions, some top end, some military to military, among other interactions, and these are all great signs, right? You can't just blank people out. This is even in the Cold Wars. You don't blank people out. You have to engage and understand and have that dialogue and find areas where there's commonalities, even though it's hard. But you have to continue that dialogue. So that's me. The biggest message is you keep talking and go from there.
Do you sense it's a lot of talk and a lot of talk on the surface? We're gonna talk trash, both directions on the surface, but underneath the surface, cooler heads, cooler dialogues are happening, and sort of from that level, the diplomacy is actually working.
It's going to take definitely some work for both sides to get to kind of where things were before, but ultimately you need these small wins to get to something more substantial, right? But like you said, in the meantime, both countries will have their own opinions, right? So they'll talk to as they see it, and sometimes it's not directed against each other. It's for other audiences as well. So it's very nuanced, as you can tell. It's not just one way, all good, all bad. It's very nuanced.
There you go. How's it affecting the market? I mean, China, and now let's mix in Asia. Money's expensive. Maybe rates come down. Economies over in Asia are not necessarily booming the way people would have hoped post-COVID. You've got an economics and finance background. What's your thoughts?
Well, first off, the Fed is signaling that they'll start cutting rates. In my opinion, that's going to be very small and very back-ended. So it's not going to be a huge wave right away. Where we are today is very high compared to the lows of practically zero, right? So this has affected basically all over Asia. And if you actually look at it, the underlying dynamics of say airline and aviation, what you also don't see, it's Asia is a laggard, right, in terms of recovery from COVID compared to other geographical regions. But what you're seeing is actually the big flows are changing. Namely, you are seeing significantly less Chinese outbound tourists who are driving a lot of the business model and flow in Southeast Asia. So this is obviously very worrying for those economies, and they want to bring that back, but not so sure that's going to be achievable. So if that's the case, how are airlines going to respond and really kind of restructure themselves to adjust to this new equilibrium? So these are things that changing is hard, right? Everyone has inertia, capital structures, et cetera. So it's going to be difficult. So, but I think this is part of the reason that it's taken the recovery longer than other areas.
And you look in China's, deflationary pressure in China, the real estate market, a lot of debt. A lot of bad debt. How long does it take for all that to sort itself out?
Yeah, there's the real estate is a huge one, right? You have 30%, circa 30% of entire GDP off of real estate and its ancillaries, right? So that's a huge hole to fill. And if you're saying new economies, EV cars, electric vehicles, and other things, it's not going to be matching it apples to apples, even for growth perspectives, right? So, but ultimately, one of the biggest kind of concerns is really kind of the demographic, the population, deflation, and basically, the aging the population. So, just like in the U.S., the Social Security mechanism is falling. There's not enough people to kind of replace it, and that will have its own consequences. It's very hard, right, when you're going for very large amounts of kid birth per person per capita to much lower. It's going to have big impacts on the economy and the population.
It does. I mean, it's going to have big impacts. So what do we see out of China? Do we see a low growth, no growth economic outlook for the next 10 years until, just sort of let the rat go through the snake per se, and until it all sorts itself out? Or, is this a longer term trend that, now has to be made up in, efficiency gains?
You're definitely going to have to need. You're going to need to find growth areas, and that's why the emerging kind of economy technologies are one area the government wants to basically keep encouraging, right? But ultimately, the restructuring is something that's been on works since at least mid 2015, right? The low taxes, debt issues, et cetera, et cetera. But that has more ways to go. That said, I think the biggest driver, at least the differences from before to now, is FDI, is foreign direct investment, right? Mm-hmm. And you see that. So there's two things. There's the stock market, the liquid stuff, and then there's the underlying factories, underlying companies and real goods. So I think you got to make a difference there. The capital side, there seems to be a lot of flight of capital this year, but ultimately, can the government create trust again? This is the trust that's dissipated post COVID. Yeah, exactly. So that to me is kind of the biggest question mark, right? If it can get that right, get that back on track, then it'll be much more warmer, rosier kind of outlooks. But if not, then it'll be much more subdued.
Yeah, and look, it affects the world. I mean, Europe, Chinese people not buying stuff affects Europe. The decoupling, a little bit of the decoupling, the lack of foreign investment from the United States. I mean, it's maybe it's a new era. I don't know. It's maybe it creates opportunity. It creates opportunities in Vietnam and Malaysia and Indonesia and certainly India and elsewhere.
Absolutely. Supply chains are very hard to change, right? So it's starting, but it's going to take a long time for that to kind of get into much more material effect. But ultimately, as end consumers, no one wants to pay more for their goods, right?
Right.
So everyone wants cheaper goods, the better. So there's always an opportunity there.
Well, and then on the aerospace side of the house, there's pesky regulators. You lose a supplier. If you lose a qualified supplier, it takes you a long time to go find another one, or it takes a long time for another supplier to ramp up to the ability that it can handle 30, 40, 50% more work.
Absolutely. It's the stickiness, right? And ultimately, I think that's something where both manufacturing do better job of encouraging more diversity in supply chain. I think we've gone through an era of cutting costs, right? Squeezing more efficiencies. And that's kind of gone downward into the supply chain. And you're seeing the troubles now, right? So getting another up and running will take time, but this is something they need to kind of incubate, not just hammer away and try to extract efficiencies that way.
See what happens. I mean, it's an interesting time. 15 years ago, everybody in China was saying if we could just get 1% of the Chinese population to buy it, we'll all be rich. And now, now that the rhetoric is such that the great decoupling has sort of happened. Where do you see the the optimism? Where do you see the market ahead? Yeah, obviously you've been over in Asia for quite a long time. The industry, aircraft values. You've been financing them and trading them. Where are you optimistic?
Well, now that we're coming off of lows and still lows today, I think there's definitely traffic-wise can still go up. I think there's still pent-up demand, and costs are just very, very high and difficult, right? There's obviously bilateral issues with the Russian airspace and competitive issues there that's dampering on the full capacity uptick back to where it was pre-COVID. But I think that's definitely an opportunity. Another one is, look, a lot of funds are leaving the space, right? China for geopolitical or other reasons. And ultimately, when you move capital out, there's always opportunity. So I see it as you have to be nuanced, and not all of them are pure opportunities, but I think you can definitely find some rosy cases in the mountains of cases that you probably go through. So those are things. And I think ultimately you could see there's actually, from a capacity perspective, there's actually some really interesting kind of underlying kind of materials and other arbitrage that can come out because there's a big dislocation between demand and actually capacity out there. So there could be some interesting plays that way, talking about supply and materials, underlying materials.
Where do you see the arbitrage? I mean, obviously the airlines are choosing to hold on to their legacy 737s, with Dash 7 CFM engines, because the GTF is now a mess. And GE can't build LEAPs quick enough. MRO capacity is still a little bit limited. I hear CFM, I was talking to somebody the other day, and they're like the CFM market, the prices for engines has just gotten astronomical. Is now the time to be, where would you be investing? Where do you think the best place to invest is? Is it legacy aircraft? Is it in engines? Is it MRO?
Well, I think the biggest question is, what's your cost of capital, right? I think right now, all throughout the new stuff, but really the really old kit, the really old aircraft are all unavailable. There's no really much out there that airlines can kind of bring in, lease in, and utilize, right? And the new production, both from an engine supply perspective, but also just a new build from Airbus and Boeing, it's very still subdued. So basically, airlines are having a hard time kind of coping with that. The plus side of that is, hey, they have an issue of getting pilots, right? So even if you could get the aircraft, getting pilots is another big issue at the moment, so constraint, and that's kind of tapered that effect. But ultimately, what do I think is interesting? I think wide bodies are really interesting, much more interesting. They're obviously bigger assets and they have much more volatility comparatively, but you find the right the deal optics, and they are much more rewarding. So I would look towards that. I would look at kind of specific kind of actually even regional aircraft. I think there's some good plays in the regional space, and so you got to look where people are not looking, which is basically you can't look at the mainline market taker. You have to look outside the box. So if you're a market taker, not so good, I think. But I think otherwise it's a tough one. But I think this debt, basically the debt's coming maturity coming up. I think that will create a lot of dislocation coming up at the end of the year.
The RJ market's interesting to me. Mesa had, I think, 50 airplanes, 60 airplanes parked. Lack of pilots. Republic had a bunch of airplanes parked for lack of pilots. Which is obviously a couple of things. Drives up cost. You get the pilots in, you drive up the cost, then all of a sudden the airplanes don't make sense anymore. Of course, parked airplanes don't make any money. Maybe you send them overseas. Is the market for the RJs overseas now? Is that just kind of where it goes, or do you see it coming back in the United States? And quite frankly, nobody's making them anymore either. I mean, you got the A220 or the E-Jet, the RJ 700, 900. I guess you fly what's left of them, but you hope they hang around. You hope they hang around for a while.
The entire regional jet market, regional airline market in the U.S. is going through a huge shift, right? All the air pilots are going to the mainline carriers, and they can't get enough pilots, period, right, in their kind of queues. So ultimately, if you're not going to use it, you don't foresee a big uptick, put them out to use. Mm-hmm. Sitting there, depreciation and all the costs associated, not the best business model, right? So subleasing, wet leasing, selling, whatever, there are markets that need these aircraft, and right. These are fine aircraft, right? Yes. So ultimately, if you can't use it, but will it come back? I think so. And the thing is, ultimately, will this market come back in the U.S.? Yes. I think people still want connectivity point to point, especially to the smaller airports. And if you see it overall, there's actually it's a shrinkage of that direct access, direct point to point access. So I think that it'll come back from that perspective.
And we'll see. I mean, I think the big deciding factor is obviously Spirit and JetBlue. The DOJ blew up that merger, and I'm not sure. Look, I don't know what they were trying to get to when they blew up the merger, because if Spirit can't hang in there solo, then the country's right. Then competition by court order is stifled. I mean, JetBlue, Spirit. Hey, we've got a better chance of surviving. We become a powerful carrier. Independently, we don't know if Spirit can last. So, there you go. But I think it's interesting, because I look at Spirit, I go, if they can't last, the pilot shortage, quote unquote, just became fixed, in many ways. I don't know. What are your thoughts on that whole thing?
I obviously the DOJ have their own reasons, but look, you're essentially saying you can't grow bigger, right? And if you look at the top big four, the three majors and Southwest, or the big four majors, 80% of traffic, right? Controlling 80% of traffic in the US, right? So if you can't get big enough, how do you compete? So I think to your point, if you can't get big, you're going to basically just become irrelevant. That's very, very bad in the overall system. So what it seems like is they're just trying to encourage more growth, more startups to try to basically disintermediate that, but that's going to be tough, right? So the couple new starts over COVID, right? As I've seen the growth from that perspective. Yeah,
I mean, I just look at it like the there was always this term, the democratization of business aviation. And I kind of look at it like, that makes about as much sense as a low calorie pizza. It just can't be done. I mean, you take a King Air, $7-8 million. Jet A is Jet A. It's $5-6. your pilot costs, your pilot costs. You're not gonna. It's very hard to operate aircraft on a your fixed costs. You're gonna be your fixed costs. If you want to charge less and work on thinner margins, that's fine. But I just don't see the low end in aviation ever really working out. And even Southwest is not necessarily a low cost carrier. It's they try to be. They try to pretend they are, but you compare their ticket prices. It's like, hey, look, they're the same as everybody else.
Well, low cost is Southwest have obviously gone through its origins as a low cost carrier, but their cost base is much different than they are today versus what they were, right?
Right.
I think their entire model of, instead of that tertiary airport, you're going to the main line, competing directly, so that makes the business model different, right, than what it was, the morphing of it. But you're right, the ticket prices are high, right? So ultimately, are you going to compete, or are you going to just continue to be in it? So, to the point about the business jet, I think that it's very tough to bring that cost down. There's a flat line kind of level where costs will have to be, and the larger the aircraft, the more you can divide that fixed cost over the biggest quantum, right? So that's why I was saying earlier, I still think the wide bodies are quite interesting because of the capacity and actually ability to make money. If you don't do it right, you're going to lose a lot of money. But if you do it right, that's where you can get that magnification of your profit.
Well, the wide bodies have gotten kind of efficient. So, do you start, I flew, what did I fly? 787 from LA a couple of weeks ago. I flew 787 from LA to Philadelphia. It was pretty full, probably, 90% full. I got to figure that's a pretty profitable flight. Do you start to see more wide body? Do you start to see more wide body? Everybody, does it by a seat mile cost and things of the sort. Do people just start flying bigger airplanes on more crowded routes? Or do they stick with 737s and A320s and see what happens?
I think there's definitely a trend upwards and upgauging, right, in aircraft, right? And I think you're seeing very, very full flights. I recently did a DC to LA myself, full flight, both directions, right? So, and very full fares to add as well. I think look, if you can fill the seats, great. Keep, and I think there is enough demand out there. So, but the question is, hey, at what level are people just going to say, hey, that fare, the yield is too high, gotta move it down in order to fill those seats? But I think with that kind of difference, I think you'll definitely see more upgauging. So I can definitely see that the trend continue to happen.
Is Boeing right in saying we're not gonna design a new? We're going to sit on our hands for 10 years and not design a new airplane?
That's a tough one, right? So ultimately, they got to get their issues out of the way first. I think that's number one, right? 777X, it's been in development for a long time. So when is that really going to come out? That's still a question mark, right? But at the end of the day, 787, 350, these are the workhorses of the wide body fleet and what everyone wants. And it's demonstrated that it's good, it's efficient, et cetera. So that's kind of where we sit today. So until there is an area where you can get significant kind of efficiencies, competitive efficiencies from the previous generation, there has to be a time to kind of mitigate, kind of amortize that cost, right? Because creating a new plane is 20 plus billion, right? At this point. So it's a large amount of fixed cost. So everyone needs to get their supply chain fixed, their quality control chain fixed. I think that's a good use of time and effort before kind of getting towards new aircraft.
I also look at it like the engine manufacturers. GTF just cost Raytheon $6 billion. It's going to cost them $6 billion to get that fixed. GE, stock is way up. I mean, I've been pounding on GE stock for a couple of years now. I think it's right in a sweet spot. But I can't imagine they want to really invest in a new engine. Rolls-Royce has no capacity to do so. So does a new design airliner, is it a chicken or egg thing? Well, we got to get the engine guys on board and healthy first, and then we'll work on it. Or do you think that they can get what they want just by, eking some efficiencies out of LEAP and and RISE and some of the other stuff?
There's definitely, I'm sure, some more efficiencies to be gained out of the current generation. But first off, let's fix and make sure all the stuff is working properly as advertised, right? And I think we're all in the industry saying, hey, had that perception of, hey, everything's going to be good, right? Now we've got new manufacturing and new materials. It's going to be good, and it hasn't been as advertised so far. Needs some tweaks here and there. So I think going down that line now is early, right? Get your stuff fixed in. But I do think once those things are fixed, there are opportunities to kind of make it even more efficient. But of course, that comes there's a balance, right? As we're seeing with the whole even with the whole resin composite 787 process, right? When we're starting to do that, there's lots of recurrent themes here in the production.
I just look at it like it might be a stalemate. We just might be at a stalemate. Everybody's looking for a great revolution in either airframe or engine. And if neither one is coming, you can just expect to be on a MAX or an A320neo, a 787 or a A350. We'll whittle it down to just a couple aircraft types in the world, and we'll be happy for a while.
Manufacturers need to recoup their costs, right? And so, and that from a lessor perspective, financier perspective, the more possibilities of interoperativeness is a good thing, right? You can easily transition aircraft, right? And by the way, transitioning aircraft very expensive, especially wide body aircraft, right? You can get it can cost $20 million plus. Right?
Oh, sure. I figure you a new livery, new interior, mods, your maintenance reserves, etc. It's certainly not for the faint of heart. What about the lessors? AerCap, Air Lease dominating. You got a bunch of middle market guys. Who's out there doing it right now?
Well, first off, the 144A bond issuers, aka the larger players, are doing pretty well, right? They're sitting on a cheaper debt, and they're able to still issue new tranches of pretty cheap debt compared to the rest of the senior secure market, right? Senior secure market, you're looking A plus, right? 8 to 10 plus percent so of cost of funding. So that really kind of wears on top of your equity, of course, right? From a balance perspective. So those guys will continue doing well. They are getting bigger and bigger, and they will have some market power, right? But I think there will always be opportunities for smaller players to find those deals that are less run of the mill. So less just market taker. But of course, lessors are getting bigger and bigger. So you're going to see much more M&A activity as well going forward to balance that approach.
So does the DOJ come in and do they start to squish that now too? Are they going to, look, it's.
I think it's a much harder. I think that's a much harder. What do you call market concentration issue, right? Even at the top end, it's still relatively low compared to other industries. So that was the AirCap and GCAS theory when they did their merger, right? So and it continues, but the median size of top 10 lessors have basically more than doubled over the last 10 years. So that gives you a sense of that threshold has really kind of moved up.
Yeah, I guess Gus Kelly's done a great job. You think about what he did with AirCap, taking it through COVID. A lot of challenges there. Then Russia. A lot of people got hurt over there. I suspect I read an article about China. People starting to hedge their bets on China a little bit. I suspect that that's a little bit less of a real worry. Maybe a little bit of one, but probably less of one. I don't know if you had, so, where do you go invest right now? If you got a couple $1 billion, you buying new airplanes, you buying mid-market, wide body, you buying engines.
I think ultimately it comes down to just like how big AerCap is today, right? They are a platform. So they're not going to, they're big, battleship, right? Or a carrier, harder to move directionally, but you're going to get good access. So if you want the smaller, nimble cruiser types, then you're going to go and look for opportunities off the cuff, right? Transitions, opportunities in that sense. So I think wide bodies always. I've always been a very agnostic in terms of from wide body, narrow body set, but ultimately, where do you see the most value on a comparative sense? And can you have outlets of transition? Right now, everything is everyone wants everything because there's not enough of any capacity. So you have 8-year terms, lease terms on 18-year-old aircraft, which is haven't heard that in a long time, and very high frothy lease rates. So that gives a lot of momentum to folks who've been in that space. So
are investors going to be? Are the investors investing in the asset class going to be pretty happy moving ahead, or is it bumpy times?
I think. Look, I think if you're just a normal market taker, it's not going to be the greatest. But I think if you're more opportunistic and have specific kind of angles, I think you can definitely find opportunities. So. But I think that's in a lot of asset classes. You don't want to be just a pure market taker, right?
No. So you're optimistic. Are you optimistic about the industry over the next 5-10 years?
Absolutely. I think optimistic, definitely. There's going to be some dislocation, just like I was saying, because of the lease rate yield perspective versus the debt cost of debt. That will definitely create dislocation, but dislocation is opportunity for some folks.
There you go. So you're investing.
Definitely, it's a post-COVID risk-on scenario from my perspective. I think it's going to be economy is doing very strong. It's going to be not this hard landing. Definitely not. It's very soft, and we'll get out of it even more.
Does Europe and Asia follow though? I mean, obviously the U.S. economy soft landing. Everybody's look, it's been a little challenging. Inflation, but we're not headed into another huge recession like a lot of people were fearful of. Europe is in a no growth. I think it's mostly self-inflicted wounds in Europe, maybe a little bit of Ukraine mixed in. Asia in a little bit of the same way. Does the United States the growth in the United States start to bring the rest of the world along with it?
Well, definitely it will be the power of the U.S. dollar will still be strong. So I think that ultimately will hurt some of the economies, emerging economies, right? But in that sense, I think there will definitely be some readjusting first, and you're seeing that in the basis of Europe. You're saying energy, food prices, et cetera, and then Asia will be similar in that sense. But once it's out, then hopefully the U.S. can drag everyone else continue on this bigger growth path.
We'll see where it goes. Well, look, let's end it here. Let's do it again though. In a couple of months, well, we'll talk about we'll see where we're all at. So, how do folks get a hold of you, David? Where do they find your book?
You can find the book on Amazon or other online retailers, and it's available on digitally or hard copy. Traditional hardback copy. And if you guys want to get a hold of me, you can just email me, pretty easy. It's just david.yu@nyu.edu, and we can go from there. I'd love to hear comments from listeners.
Awesome.
So thanks.
We'll put the book up in the show notes too. So all good. So cool. Hey, David, thanks for coming on again. Welcome back. Let's talk again soon.
Thank you. And sounds good. All right. Bye-bye.
I hope you enjoyed the latest edition of the Aerospace Executive Podcast. You can reach out to me directly, Craig at NorthstarESG.com, or check us out at www.northstaresg.com. You can subscribe to this podcast on iTunes, Stitcher, Podbean, or on YouTube. Just do a search for Aerospace Executive Podcast. Thanks again. I'm Craig Pitt.